sort of mirror bends, certainly with all the asset managers that I speak to. One of the big sort of changes that we've noticed over the last sort of several weeks since that statement came out is that plans that were previously firmly on hold for these products are now very much no longer on hold. And
Alrighty, everybody, what is going on? Welcome back to another CYPRX video breakdown. Today, we're going to kick it off with a two-part video series. In part one, we're going to be showing you all undeniable proof that the narrative of DeFi being a scam is outdated, that institutions are for a fact entering in this space, while retail is still stuck thinking about past cycles. You're going to hear directly from smart money market participants on where things are headed in the near future. And then in part two, we're going to dive into one of the biggest unlocks in XRP history, the shift from idle holdings to active yield generating strategies. If you're still letting your XRP sit on centralized exchanges or dormant and cold storage wallets, you are missing the utility wave that is about to hit. So let's dive into today's video breakdown. I want to start here. And we're going to start off in the first portion of today's video breakdown also by listening to some panel discussions that go relatively unnoticed and hardly have any views, listening into some perspectives from some of the industry leading experts in the space, market makers, institutions, large organizations that are participating in the crypto ecosystem with very large amounts of capital allocated to this space. So I suggest that you guys pay attention to what it is that they're saying, because they don't have the same outdated perspective that retail traders with zero credentials on the internet have. So it would behoove you guys to start to listen to the people who actually matter in this ecosystem. Starting here with this post, because we're going to full circle back to this in part two of today's video breakdown, where I said, we are no longer just in an era of knowing what you hold. How many times have you seen XRP community members say that in live spaces, on their YouTube, on their X profiles? Know what you hold, right? We are entering into a new financial paradigm where it's about how you make what you hold work for you. Day trading and chasing price projections, that is an old playbook way of thinking. The new era is about asset productivity, automated yield strategies, and sovereign financial control. With tools like Flare's F assets, FXRP, and STXRP, your XRP can now be staked, can generate yield, and can be reused across different DeFi protocols. This is no longer just holding. This is deploying capital intelligently. This is the DeFi evolution, all right? And so I wanted to start it off there because we have individuals here on the internet. Let me redact this individual's name because, again, I'm not here to attack anybody, and I don't want anybody to think that I'm calling influencers out. I'm just here to show you guys that the average retail investor on the internet still has this outdated 2022 mindset that the DeFi ecosystem is all but a scam. So here you can see an individual posted a comment in reply back to that post where they said, DeFi is promising, but let's not forget past crypto hype cycles. I'm cautiously optimistic, but still waiting to see real world adoption beyond speculation. And so I'm going to show you guys industry leading experts today that are going to tell you guys that this is happening right now at scale and that they are 110% willing to adopt staking. They're 110% willing to take their idle capital and put it to work in the DeFi ecosystem. And I said in reply back to this individual, while you are still waiting for real world adoption is taking place. The market landscape has matured significantly from previous cycles. Of course, there are still inherent risks, but there are ways to mitigate those risks. But comparing the current landscape to previous cycles would just show lack of research in light of recent market developments in just the last 6 months. So let me share with you guys what it is that I'm saying, kicking it off with today's first portion of the video breakdown. We're going to be listening to industry leading experts. I'm not going to break down specifically who all these people are. It would just take so much time to generate that lengthy breakdown on who each of these speakers are. But each of these speakers stem from large organizations, institutions, hedge funds, asset managers, private family offices, the likes of people who actually move these markets. So this is a video breakdown that was uploaded 12 days ago. Shout out to the CYPRX researchers, only has 39 views. This is just to show you guys each of these video breakdowns I'm going to share with you has hardly less than 100 views. And it just proves my point that most people still have no idea what is happening because they're not paying attention to the right research, which is why you guys should head over to CYPRXtrading.com, tap into our private Discord, because all of this information that never reaches the mainstream masses is shared in our Discord via our private researchers. So let's listen to what this gentleman here says, where he talks about the verbal clarity that the SEC gave and how it has taken institutions that were previously sidelined off of the sidelines, and now they're willing to engage in the space because of that verbal clarity.
So I don't know if we want to start with the validator infrastructure and how the SEC's change on not looking at staking yield as securities. So
yeah, I mean, I can kick it off. A couple of subtleties to add to that guidance, specifically around native and liquid staking. So importantly, the SEC did address and basically say that native staking was okay.
The prior U.S. government administration discouraged Americans from participating in these market-based systems by asserting through lawsuits, speeches, regulation, and threatened regulatory action that participants and staking as a service providers may be engaged in securities transactions. I'm grateful to the Division of Corporation Finance staff for clarifying its view that voluntary participation in proof of work or proof of stake network as a miner or a validator or staking as a service provider is not within the scope of the federal securities laws.
Yeah, I think my experience is sort of mirror Ben's, certainly with all the asset managers that I speak to. One of the big sort of changes that we've noticed over the last sort of several weeks since that statement came out is that plans that were previously firmly on hold for these products are now very much no longer on hold, and they are now making significant efforts to really try to sort of visualize what these products will look like operationally, legally. There are obviously significant challenges here, which I'd love to talk more about, and I'm sure we'll touch upon later, certainly as it relates to liquidity.
So you just heard directly from an institutional representative mention that institutions and organizations that were previously on hold from participating in this ecosystem now are not on hold any longer after that verbal statement directly from the SEC. That is huge confirmation from industry leading experts in the space that actually have valid credentials and that are actually market movers in this ecosystem, not retail based speculative opinionated investors on Twitter just yapping because they have an opinion about past market cycles. So take those things into consideration. Now, if that is not enough confirmation for you guys, let's head over here. We have this industry leading expert from Alluvial. She is the CEO, Mara. I'm not going to butcher her last name, but just take a second and listen to some of the things that she says here in The Block interview. So shout out to The Block for this one. This was uploaded just 2 weeks ago, and this video breakdown, when I saw it, only had 24 views. Now, as of time of recording, it only has 202 views. So still a lack of people actually educating themselves about the ongoing adoption curve in this ecosystem by watching interviews and panel discussions like these. Take a second and listen to what she says about institutional demand picking up for staking capabilities.
I think in general, we're seeing a growing demand for institutional staking at large, and I think that's true across all networks. If you look at some of these statistics, but then also some of the milestones that we're seeing in the market, you have things like, ETH hitting all-time highs on staked assets on the network. I think that was only yesterday. You have major industry giants like, Fidelity and Grayscale filing for staking inclusions in the ETH ETFs. You see filings for Solana ETFs that hopefully will include staking in due course. And of course, you're mentioning the corporate treasury strategies, but I think we're seeing there sort of a really early use case for what it could look like to have, a crypto-backed and denominated treasury strategy where staking really unlocks more treasury-like reward rates for market participants and those corporate treasuries as well. So I think overall, it seems like we're sort of seeing holistic trends of the institutional market coming on chain, participating on chain, but also leveraging, the benefits that proof of stake networks provide holistically when it comes to unlocking reward rates, and then more particularly unlocking additional usage. And I think that's where liquid staking tokens play a particular role. When you think about,
So I want you guys to pay attention to key vocabulary that she mentioned, because here she talks about strategies and treasuries and yield generation in those treasury strategies. Well, do you guys remember just a few weeks ago, Vivo Power, publicly traded company focused on XRP-centric treasury strategy, announced the launch of a definitive partnership with Flare to generate yield on its digital assets. The agreement initiates the deployment of Vivo Power's XRP holdings through the scalable framework, beginning with the benchmark initial phase of the US $100 million investment. This marks the first major execution of Vivo Power's new corporate strategy and significant validation of the XRP ecosystem's utility for institutional treasury management. So you're seeing these things pick up. This is a large organization listed on the US stock exchange that is investing in XRP for yield generation through a treasury strategy. This is huge. And you just heard the individual representative here from Alluvial, the CEO, mention yield generation strategies in ETFs and treasuries. Again, hopefully a light bulb is going off so that you guys can see that people that matter in this space are telling you guys the landscape is shifting from idle to active and passive strategies in the space, putting your liquidity and capital to work. Let's continue where she goes on to say here that we are in a better universe or better world than we were previously in past market cycles.
Thing like Solana, where I think the ratio is closer to 70% today.
And what do you think of the lawsuits or the sort of like attack on staking in the US? And obviously sort of Coinbase has been a big target, but with that you've seen Illinois and Alabama drop their staking lawsuits against Coinbase. Like, do you think that's starting to change? Is there promising light there?
Yeah, I mean, I think that, look, the SEC staking guidance was a massive, step in the right direction to clarify what technical staking services are, what categorizes them, and also what distinguishes them from things that maybe look more like lending programs, right? And I think that was very, very important. It feels like we're in a very different universe now than where we were maybe even a couple of months ago. And I think that's ultimately going to be a good thing, right, to unlock, participation. If you think about it in some ways, market participants that are unable to offer staking inside of their products are not going to be rendered competitive in the global sort of landscape of things, particularly if you think about them already offering services like holding their crypto, using their crypto to support network security, and then also being able to earn rewards on it. Kind of starts feeling like table stakes in terms of the services that I think we'll start seeing a lot of these market players offer.
And how important is it, do you think, for the ETFs to start offering staking or to start including that?
Very important. I think the reality is that you have jurisdictions like Canada and Switzerland where staking has already been approved for certain ETPs and ETFs. I think, again, for US products to be competitive, they're going to have to offer, the inclusion of staking in their solutions because, it's sort of a loss for the investor. Not having access to these reward rate, it actually renders these products less competitive than just, staking your ETH if you have it on your own balance sheet or through another vehicle or asset manager. And so I think that's quite material. If you look at the $9 billion in AUM that's managed in US ETFs and you take the 3.1% reward rate on ETH, that's 280 million annualized in rewards that are not getting paid out and then are not being made and then are also not securing the network, right? So I think it ends up being quite material at sort of the scale and size that we're looking at in the markets. But I'm quite optimistic, based on where things are heading, that we're not far away from these things getting approved for Ethereum and then fingers crossed also hopefully for Solana soon.
And I'm just going to go outright and say that if they get approved for Solana, they get approved for ETH, that eventually later on down the road, when the DeFi ecosystem becomes a lot more mature on the XRPL, we will also see those things be approved for XRP. Ladies and gentlemen, this is physical proof that any retail investor that has this outdated mindset that is yapping on the internet, you should be avoiding, and instead you should be tapped in to individual leading experts with actual credentials in the space, telling you guys that the landscape is changing. We're in a different universe right now, even from where we were at just a couple of months ago. The regulatory guidance is being firmly put in place. They are optimistic that these things are going to happen over the near term. And if these organizations, these institutions, these ETFs don't offer staking solutions, they are going to lack competitiveness. That is a huge statement coming from a CEO from a reputable organization in this space talking about staking. Now, last but not least, if again, that was not enough confirmation, this is a panel discussion that took place from Figment 2 days ago, only has 66 views, and we have a representative from Galaxy here directly say that when regulatory clarity is clear, they will 110% be jumping into staking. Take a second here and listen.
How are your customers asking you about this today? Do you think, if we were to get staking approval in ETFs tomorrow, and you guys are, able to spin up validators and start staking a portion of the Ethereum in ETHE, do you think your investors care? Do you think that's a motivating factor for maybe capital that stayed on the sideline that's prevented some of the ETH products in the US to be as competitive, at least on a relative market cap basis, to the Bitcoin products?
In short, yes. If we got approved tomorrow, we would stake tomorrow. That's where Grayscale is. We are there. Is it keeping capital on the sideline specifically for Ether? That's maybe a different question. The demand profile, the ETH, ETF ecosystem has had headwinds this year. But what's really interesting, and it goes back to a point Owen made, which was the education demand is absolutely there. And so now you see real reward rates that can add to your position. I think that will draw capital. And I think Bitcoin as the digital gold and the benchmark, there's going to be a very easy transition to, okay, Bitcoin doesn't earn reward rates. unless we do something different, like our previous panelists had talked about. But proof of stake protocol provides that. And now all of a sudden you have different reward rates, you have different potential economic opportunities that can be passed through investors. I do think that takes capital off the sidelines, and we're here for it. Grayscale is going to see that cycle play out.
So now you guys have verbal confirmation from multiple industry leading experts, hopefully getting the brain juices flowing and getting you guys to see that we're not making this stuff up here. I'm trying to motivate you all to pay attention to industry leading experts that actually matter. When you're listening to opinions in the space, you should be listening to opinions from people that actually move the markets, not retail trading participants that have a few $1,000s invested into crypto. Okay. Those are not the people's opinions who matter. The people's opinions who matter are the large scale institutions who, when they come into this space, they come into the space with hundreds of millions, if not billions of dollars invested. And so now you guys are hearing directly from these market participants that they are 110% interested in staking. They are optimistic about the regulatory landscape surrounding staking in the recent light of the activity from the SEC. You guys should not be ignoring your education in this ecosystem when it comes to DeFi, yield generation strategies, and putting your idle digital assets to work. Keep in mind that here in the CYPRX Private Wealth 28 Club community, we do not encourage you guys to go out there and deploy into the DeFi ecosystem. But what we do encourage is that you guys shift your mindset, your way of thinking, and you start to educate yourselves. So hopefully you guys enjoyed part one of today's video breakdown, showing you guys physical proof from large scale organizations in this space that are active, that now is the time to shift that mindset. So with that being said, do me a favor, smash that thumbs up button and subscribe to the platform. And I will see you guys in part two of today's video breakdown.